Thank you so much. I'm so glad I didn't start anything. You haven't missed anything. I haven't started anything yet. I was telling you all to let me know if you can hear me and see me because I was looking for my timer. So, thank you so much, Misha and Estate. I don't know your name. That's your Facebook name. Let me know if you can. Let me know if you can hear me now. Can you hear me now? Can you hear me now? And I'm gonna be squinching a little bit because I cannot find my glasses. Can y'all hear me now? Okay, perfect. All right. So, um, I'm Melinda Talbert. If you aren't familiar with who I am, I want to share some major changes with the new Trump administration that's happening in the tax industry. So the Trump administration and the House of Representatives, I mean the House of Republicans, like tongue twist, are proposing that it's a lot. I'm not gonna go over a lot tonight. I'm gonna give you a high level overview of the things that will affect you as a taxpayer, and a tax professional if you're in the tax industry. Um, so some of the proposals include, I'm gonna pull my notes up, eliminating social security benefits, tips, and overtime pay, along with rolling back some of those key provisions from the Tax Cuts and Jobs Act. And I'll go over the Tax Cuts and Jobs Act in a minute because that's something important that you as a tax professional need to be aware of. Make sure you understand it because this is going to affect you and your clients. So you need to know about the Tax Cuts and Jobs Act cuts that may or may not be happening. These policies will have a major impact on all taxpayers. It doesn't matter what your income level is. If they move forward with the things that they're talking about, it's going to affect you whether you make under $400,000 or over $400,000. It doesn't matter if you have a small business or a large corporation. Some of these changes will still affect you. It's gonna be a huge shift in how we as tax professionals handle cases and represent our clients. So I have and I'm gonna see if I can blow this up a little bit. I have a document, an outline document that I created so I can stay on track. So, one thing that's happening right now is the workforce crisis that's happening with the Internal Revenue Service. So, I know you've probably been listening to and looking at the news media and all the different outlets. I don't know what your resources are, but make sure it's credible because there is a lot of incorrect information going around. It got so frustrating for me to the point where I had to just log off and take a break because it was overwhelming. So first let's talk about the massive workforce reduction that's coming to the IRS. So far, there has already been over 8,000 employees that were probationary employees. They've already been laid off, and there is more to come. So that's not it. There was a lot of jokes going on about Musk sending out a "What did you do?" email. So that email is connected to some of the layoffs that's happening. On February 26th, Dodge is the Department of Government Efficiency. They requested a reduction in force plan, and what that is, it's called the RIF plan. What it is um, it is for federal agencies. Hold on one second. Let me try to blow that up a little bit more. Okay, I hope y'all can see that. I have it blown up as much as I can. Somebody said they can barely see it. So on February 26th, Dodge requested a reduction in force plan from the IRS and other federal agencies. So the IRS allegedly could be cutting up to 90 half of its 90,000 employees. So I'm like, right now we are already having a really hard time with getting the agent on the phone since the 8,000 people have been cut. So just imagine if they cut half of their staff. Just it's gonna be a lot. So they're planning on cutting half of their employees through layoffs and buyouts. I don't know any details about the buyouts for the employees. Nothing has been released yet. Please believe once something is made public, I'll share that information with you all. So for now, I just know that much. Um, with fewer IRS employees handling cases, our role as tax professionals is going to be more critical than ever. We will be the ones that are ensuring that the taxpayers don't get lost in the system and that their cases are handled fairly. So, what is a RIF, the reduction in force? A reduction in force is a federal government downsizing process that typically involves eliminating positions that are deemed unnecessary, reassigning employees to different roles or agencies. And a good example of that is there has been reports made that indicate that the Trump administration plans to transfer some of the IRS workers to the Department of Homeland Security to assist with immigration enforcement. I don't know how true that is, but I did read that. So that's just a good example of reassigning employees to different roles. They also are restructuring departments to streamline operations and to consolidate functions. Now, the IRS have until March 13th of 2025 to submit the RIF, and they have a second phase that'll be due April 14th of 2025. Um, in that second phase is going to include office consolidations, system upgrades, and Lord knows, I pray that they will proceed with the system upgrades because the Internal Revenue Services systems are so antique. I don't know if they got that far to have their systems upgraded and to talk to each other yet, but last year and prior years before Danny, the prior IRS commissioner, who is no longer there, by the way, he had a lot of great plans in place, especially for their antique systems. And they're going to do some workforce restructuring as well. So these changes are supposed to roll out through 2025. And for taxpayers and tax professionals that are asking, well, is the IRS going away? Hell to the no. I can promise you the IRS is not going anywhere. The federal revenue, the IRS ain't going nowhere. Things might change and we might have less employees, and we might have longer processing times, but I can promise you the IRS is not going anywhere. So y'all can stop gossiping about that and you can stop praying and hoping that they're going away because they're not. We have too much revenue from the Internal Revenue Service. The IRS also have policies and procedures, and they still have to acknowledge the taxpayers' rights. But you know, taxpayers, they're not aware of the policies and procedures or their rights, so they're going to be dependent on us to take care of them. We as tax professionals must step up to prevent our clients from getting lost in the system and in the backlog that is about to happen. Um, that is all with the riff. Here is something that I really want to talk about for people that don't know what's going on with the budget cuts. Um, so, if you are a tax professional, you should be aware or familiar a little bit with TCJA. The TCJA, which is the Tax Cuts and Jobs Act, it was passed in 2017 by a Republican led Congress. It was said to be the most significant overhaul of the US tax code in nearly 30 years. And I'll never forget that year. I was, of course, doing taxes back then. And when all the changes happened, just like people are scrambling around now and concerned about what's going on and what's going to happen to the tax system, um, it was that way back then as well. So what happened was some of the changes that were made when the Tax Cuts and Jobs Act was passed, the corporate rates that were 35%, it was cut to 21%. There was a cap placed on the SALT deductions, the state and local tax deductions. That cap was $10,000. Before the Tax Cuts and Jobs Act, there was no cap on the state and local taxes. The standard deductions were doubled. The number of taxpayers that used to itemize no longer had to itemize anymore because the standard deduction was doubled, and people really didn't have enough expenses that exceeded the standard deduction, so it wasn't a need to itemize. The child tax credit was also expanded, and it increased the value and the income phase outs. The 1.5 trillion tax reform bill was designed to boost economic growth, reduce regulatory burdens, and create a more competitive business environment in the US. So I've created this chart, but before I create the chart, I'm going to tell you why all of this is happening right now. So the budget rules and to avoid increasing the federal deficit beyond a 10-year window, many of those tax cuts from the Tax Cuts and Jobs Act for individuals and small businesses were temporary, so they weren't made permanent. So it was 10 years, and 2025, the end of 2025, December 31st of 2025, unless the Tax Cuts and Jobs Act is extended or made permanent, it's going away and it's going to revert back to what it was prior to the Tax Cuts and Jobs Act. So I created a table, which is what you see here, to kind of give you a visual of what the Tax Cuts and Jobs Act provisions consist of, and what the changes were back then, and what the changes might revert back to. So on the first one, it's the standard deduction. So the standard deduction actually doubled. So for single people, it increased to 12,000, and for married taxpayers that filed married filing joint returns, it was 24,000. If the standard deduction change isn't extended or made permanent, it's going to go back to the low amount, which is going to be back half of what it used to be. But of course, it's going to still adjust for inflation every year, but it's not going to be nearly as much as what it is now. So the people that used to itemize back in the day, you probably are going to have to go back to itemizing because the standard deduction is going to be so low. The individual tax rates, if it's not extended or made permanent, is going to revert back to what it was. The highest rate was 39.6% back then. Right now, the highest rate is 37%. And I'm not going to go over all of those percentages, but this is what the change will revert back to. The child tax credit. The child tax credit was actually doubled. The child tax credit used to be $1,000, but when the Tax Cuts and Jobs Act was passed, it was increased to $2,000. And it also had higher phase out amounts. for you to be able to be eligible for the child tax credit. So if it's changed, the phase outs is going to get back lower as well, meaning that many people that qualify for the child tax credit now, you may not qualify if these changes aren't passed. The SALT deduction, this state and local tax deduction was capped at $10,000. And that's something that I didn't like because I used to use that as a deduction, but when they put a cap on it, it kind of messed me up and I had to find other strategies to not have to pay taxes back. But if this isn't passed, then it's going to expire and the full deduction will be restored. So there won't be a cap on the SALT deduction. The estate and gift tax increased from 5 million exemption per descendant to 10 million exemption per descendant, which was really good. And something new that came with the Tax Cuts and Jobs Act is the QBI deduction, the Qualified Business Income Deduction. So the deduction is for pass-through businesses. It's a 20% deduction that you can use to offset your taxable income. But if it's not passed, then it's going to be eliminated. So there is no change with that. It's either going to stay or it's going to go away because it was new. The corporate tax rate. So I've been getting questions about will the 20% corporate tax rate expire? Good news with that is it was one of those provisions that weren't made temporary. The Tax Cuts and Jobs Act tax rate reduction was actually permanent. So as of now, it shouldn't change, but with Congress now revisiting the tax code to address the Tax Cuts and Jobs Act expiring provisions, I'm not gonna do a hard no on that. So we'll monitor the corporate tax rate. So, with all the major changes on the horizon, if you are a tax professional or a business owner, you need to stay informed. I will try my best to keep you all updated on the changes that I think that you need to be aware of. Um, Now is the time to start preparing for what's next. Which brings me to tax professionals. If you're not a tax professional, none of the rest of the information that I'm about to provide probably won't be useful for you. But if you are a tax professional, now is the time to become an enrolled agent. Um, the IRS collects over 90% of federal revenues. It has been working to improve the service times by hiring more staff and rolling out new scanning technology. But if these budget cuts pass, it's going to lead to longer wait times for tax professionals needing IRS assistance. It's going to be delays in processing tax returns. The backlog in audits and collections is going to be crazy, and more tax professional are going to be needed for representation. I can tell you what I'm experiencing as a enrolled agent right now. It's horrible. The call time is back up. It went from I use NQ, so I don't even dial in directly to the Internal Revenue Service hotline. I use a service that cuts the people that are already on hold, and their hold times are still high. Today, I called using that service, and the normal time is normally less than 3 minutes. Today, it took me 25 minutes. Not only did it take me 25 minutes to get an agent on the phone using NQ, but once I got an agent on the phone, they had to transfer me to another department because I have quite a few government employees as clients, and they have a separate line that we use for government employees. So when the representative transferred me to the government employee line, the wait was 60 minutes. And I'm like, So that was about, it would have been 2 hours if I would have opted to stay on the line. I tried out the new system that they have for the callback. It was about 10:30 when I scheduled the callback, and it was a little after 11:30 when I received the callback. I didn't pick up because I was already on another call. So I don't know if it would have been the right person calling me back, but I can tell you that they did call me back, and that 60-minute time frame was kind of on point. Another thing that I'm experiencing is case reassignments. So some of my cases that were with certain revenue officers, or that were with several IRS counsels, IRS attorneys, are being reassigned to other people because those employees that had my cases were probationary employees, or they probably took the buyout. I don't know what the case was, but they're no longer there. So some of my cases are being reassigned, and the people that they're being reassigned to, it's kind of like I'm starting from square one, because sometimes if the deadline for my employee financial package, if it's near, or if it's thousands and thousands of pages, I hand deliver those packages. And some of the cases that I've had reassigned, those packages were hand delivered. So everybody at the IRS is scrambling around trying to find my damn packages. And if they don't find the packages, I'm going to have to start from square one. Thank God I have copies, and I keep copies of everything that I provide them. But it's just a matter of all the time it's going to take for me to put the package back in order, go over it with the new RO, or go over the case with the new counsel. It's a big headache that I'm experiencing already. And it's only been 2 weeks since these "what did you do" emails have went out, and I'm already having a lot of chaos. Another issue that I am noticing is I settled two cases last year with the Internal Revenue Service right before it went to trial. We settled it. I didn't get it settled with the appeals team because they wasn't giving me what I wanted. So it was sent back to go to trial. But it didn't make it to trial because me and the IRS attorney, we came, we got on the same page, and he gave you what I wanted. I received letters. I received two letters in the mail to yesterday stating that my case is being sent for trial, and these are cases that are already resolved. So I don't know what's going on with that. I don't know if they are making mistakes and sending out letters. I haven't had a chance to really research what's going on with it because I'm on the phone triple time frame that I normally have to spend on the phone because of the long wait times that are back in place now. So that's just some of the chaos that I am experiencing as an enrolled agent. Um, Let me make sure that is it. Oh, okay. So if you are a tax professional and you kind of don't know what an enrolled agent is, an enrolled agent have the same representation rights as a CPA and a tax attorney. Um, we help clients navigate tax disputes, and with a shrinking IRS workforce, it is definitely going to be needed. Right now, I'm stressed out. It has always already been a shortage with enrolled agents, but just imagine now how much of a shortage it is. And baby, if they cut 90,000 employees in half, it's gonna be bad. It's gonna be real. It's gonna be bad, and it's gonna be good. It's gonna be bad because it's gonna take a lot longer to get cases resolved. It's gonna take a lot longer to be able to speak with someone. But enrolled agents will not go hungry. In fact, this is the year. If you are already an enrolled agent, and if you're not making seven figures, this gonna be your 7-figure year. So keep that in mind. Another thing that enrolled agents do, let me stick to the script. Another thing enrolled agents do is we advocate for fair treatment and we ensure that our cases don't get lost, because sometimes when our cases are assigned to revenue officers, their caseloads are very high and our case is probably at the bottom of the pile. As an enrolled agent, it's our job to make sure that they are working our clients' cases, and that we're keeping the taxpayers informed on what's going on with their cases. And lastly, another thing that enrolled agents do is we have to stay ahead of the different policy changes and the IRS enforcement trends, which is what's going on right now. So, what I'm doing right now at keeping you all informed is going to be your job to stay on top of all these different changes and to make sure that you are aware of what's going on in the tax industry. So, if you have been brainstorming or thinking about or praying about if you should invest the time and money to become an enrolled agent, without a doubt, now is the time. Our enrolled agent boot camp will be in June. We actually have a 12-week free masterclass that is going to start tomorrow. Actually, it's going to start tomorrow. It's a virtual 12-week masterclass that we have for tax professionals. We is the reason for the masterclass is number one, to help you understand how to answer those questions that's going to be on the exam, to kind of give you a feel of what's going to be on the exam, what type of questions are on the exam, for you to learn what you need to know to pass the EA exam, and most importantly, for you to decide if it's something that you really want to do, because it is a really big time commitment, and it's not a test that you can just pass by luck. You really have to know tax law to be able to pass the enroll agent exam. So, my timer is over, of course. Let me see if I have any questions. Let me get out of this full screen. Serene Supreme said, thank you for this information. You're welcome. I would love to get my EA license this year. Okay. Join us tomorrow in the masterclass. We're having a masterclass. It's going to start tomorrow at noon. If you are not a member of our private EA Facebook group, I will send you that information, Serene Supreme. We would love to have you on board. The boot camp and the masterclass is amazing. Thank you so much. Thank you, thank you, thank you. Let's see if I have any more questions. So, everything you need to know about the boot camp, I don't have the information in front of me. The reason for doing this live wasn't to really talk about the boot camp. It's to make tax professionals aware that if you're not an enrolled agent, a CPA, or if you're not an attorney that specializes in taxes, you need to get with the program. We have if you are already an enrolled agent and you're kind of still trying to figure out what it is that you want to do, we actually are launching I'm an EA Now What course to try to help you. It's a mentorship training program to kind of help new EAs determine where they want to go in the tax industry, whether you want to do tax resolution, if you want to specialize in corporation taxes, if you want to dibble and dab into fraud investigation and tax court, criminal investigation. We'll talk about all of that tomorrow on after the boot camp. So, unless you all have more questions, and I'll leave this up for the people that joined us at the end, in the middle, or if you want to just go back and review it, you can. I'll leave it up. Well, I don't see any more questions. Thank you all so much for tuning in. I hope this information was helpful for you. Please excuse my voice. I have been doing so much talking and training and all other kind of stuff that it sounds like I'm becoming hoarse. So I'm gonna take a break after the master class tomorrow. So y'all have a good night. Thank you for tuning in. Talk to you all soon.